Now my pleasure to have with us here today Leo Melamed, for crying out loud. Leo, welcome to Traders Nation. How are you today?
Great to be here. Thank you.
Good. And the name of the book, once again, folks, is For Crying Out Loud, From Open Outcry to the Electronic Screen. Leo, let's briefly tell us how dramatic was the transformation of trading that occurred during the 10-year period spanning 96 to 2006. Is this when modern futures exchange was born that we see today?
Well, they were born in the 70s when in fact they transferred their agricultural base to finance.
Yeah.
But during the last 10 years, they actually became a global enterprise because of transfer to electronic trade.
Sure. All right, so that's the key thing here, is going from what, paper to electronic?
Yes.
All right, now, you've got many colorful trading stories from decades at the exchange, such as the night in 1987, stock market crash. I'm going to set this up. When one of the exchange's largest players had an immense margin call, and you were forced to call the firm's chief executive to demand payment. How did that go down?
Well,
can you imagine?
It was a scary moment for all of us.
Right.
And of course, this bewildered executive, of course, normally doesn't get middle-of-the-night calls for margin.
Sure.
We're talking about the major firm. At that time, there was no question they had the money. But they had to have the money into the CME by 7 a.m. the following morning, and we're talking $1 billion.
Right.
So we were nervous.
Yeah.
And made him kind of nervous.
Sure.
But as I stated then, if he didn't react to this call, the next call he'd get would be from the Federal Reserve Chairman Alan Greenspan.
Sure. That's amazing. How do you break it to him? It's like, Mr. So-and-so, we got a problem here, and you're a little bit short, by $1 billion. But we appreciate your business. How do you break it to him?
Well, you're kind of gentle. You try to explain what the situation is. It wasn't like he didn't understand very quickly.
Right.
We're talking somebody that is fully competent and an expert in these things. And it was just it was the middle of the night, and there was a unusual call. But then we were in an unusual moment, so. We tried to break it in a fashion he would quickly understand, and he did.
All right.
I'm sure he called several of his people to confirm what we were saying.
Sure. All right. So there wasn't like silence and then this breaking down, sobbing, or anything like that. He knew.
No, not at all.
Because if someone called me for $1 billion,
kind of, who is this call?
Sure, Leo. I can tell you right now. Somebody woke me up at 3 o'clock in the morning and asked me and said I needed to come up with $1 billion. I know this situation's different. I would probably sob. I would probably need a Kleenex or two. All right, nonetheless. Did they ever make it back up? I mean, they got to pay it out, but did this particular firm, I won't say who, did they ever make it back up? Did they make their money back?
Oh, yeah, actually, they never had a problem, really, because under those rules, we didn't know what their other positions were. As it turns out, their other positions were fully funded, and so that they were making about the same thing in another place, about the same $1 billion they were losing here. And so that it was really a no-sweat situation, but the rules at that time, that's all changed now, did not allow us to know this.
Right.
And so it turned out to be a scare, but not a sweat.
Right. All right. Fair enough. It's all on the day of business, is what I say, Leo. Okay.
Yes.
All right. Now, winners and losers. You must have seen winners come along and then lose it all. What was their mistake?
Well, I think you get too arrogant sometimes. When you're too strong, you think you can't ever lose.
Yeah.
It's the markets are very fickle, and you've got to respect them. And I don't think you should ever get arrogant about a position that you have. I think you always kind of think that disaster could be around the next corner, and if you keep that in mind, I think then you have a better chance of keeping what you make.
Sure. Let's talk about that, because winners, that's the other side of it. Winners, again, you have winners and losers, but winners came in, but they managed to protect themselves and keep it. Were there more winners than losers, or the other way around?
In this particular meltdown, there were certainly more losers than winners, because the public lost an enormous amount, and they didn't have another side to that market. Some of the firms were very good and very fortunate that they had hedged themselves and used our markets to protect their themselves. But
sure.
All in all, it was a more losing proposition than a winning one.
All right, let's fast forward from 1987 to 2008 and 2009 here. Winners, losers there. What are your thoughts on that? Obviously.
Well, the 1987 was a 3-day phenomenon. It was over. It was quick.
Right.
This took a year.
Right.
And people didn't recognize the depth of the problem for a long time. They kept hearing things actually from federal officials, from the government, that things are okay and they're going to be okay and so forth and so on. So the whole thing was kind of a huge slow motion movement till finally the recognition came that this is serious and it's going to be a bad one.
I know. The federal government, they're telling us, listen, it's okay. Continue to spend your money.
That's right.
And that's the kind of message that everybody was getting. But, everyone else, when you're losing your shorts, you're going, well, wait a minute. They're saying I should spend some money when the fact of the matter is I'm losing more money than I could possibly spend.
Exactly right. And it was the joke of the day was the 401k became a 201k. And
right.
That didn't come back so easily. It still isn't back.
Right. All right. So let's talk about this. Have the markets as we know them, have they changed forever?
I think some of it has changed forever. I think the regulatory authority is going to force some disclosures that never existed before.
Yeah.
They're going to require additional capital requirements, which we wholeheartedly support, because people were trading with a ratio of asset to debt that's unbelievable, 50 times, 60 times. The norm was maybe 12, 15 times debt to assets. So I think the regulatory authority is going to change some of this forever. However, if you think that there will never be a problem again because of that, think again.
Right.
I mean, there's always going to be problems because markets, by definition, go both ways.
Let's talk about capitalism. Will it survive? Because there seems to be this growing ideology out there in society that socialism is the best thing coming and capitalism is dead. They've even
all I can tell you is God forbid, because that is the dumbest thing you could think of.
I know.
Socialism and communism were tried for 100 years and failed miserably.
I know.
The standard of living of the whole world is up enormously because of capitalism and because of free markets. God forbid that we go back to a failed system that we know failed.
Right.
That's not to say capitalism doesn't have its own problems, and of course it does. There is no perfection.
Yeah.
But for heaven's sakes, it's 1,000 times better than what was.
Well, I know, and some of these people, they just don't get it. All right, Leo, thanks for being with us today. For Crying Out Loud's the name of the book. Crying Out Loud. Go out today. Get a copy of this book. Barnes & Noble. We came up against a hard break, so we had to go. Barnes & Noble, Amazon.com, wherever fine books are sold, okay? And great information on the markets. If you want to know what's going on, if you want to know where the markets are going, etc., this, without a doubt, is the guy to do it. Leo Melamed, by the way, is globally recognized as the founder of Financial Futures, okay? 1972 as chairman of the CME, that's the Chicago Mercantile Exchange Group. He launched currency futures, and it just goes on and on. His credentials go back, way back, and he is the one that's in the know, all right? Today, get a copy of For Crying Out Loud, from open outcry to the electronic screen, all right? Very good. And I wish we had more time. I really did, because I had some other great questions. We're going to get Leo back on the show, I think, and do some follow-up questions to the one we had today.